Yeah, no, dead right. Just on equities. Look, we didn't buy a lot of equities in the recovery. Like yourself, we were somewhat ambivalent. We think it was driven by these expensive stocks, these momentum stocks going higher, and we're starting to see what that happened. We've seen these retail traders, Robinhood or SoftBank, which is basically a listed tech investment company, buying short-dated options that basically effectively supplies momentum into these tech stocks. Well, if that's not top top of the market behavior, I haven't seen anything. There's some really late 90s type behavior. So I actually have a lot of sympathy. You know, the stock market itself is very expensive, valued, and what gets a Guernsey or a Jersey, whatever you're from, in this market is it looks okay relative to cash and bonds, but there must be other stuff out there. And I know you're going to shoot me. Other stuff could be alternatives, could be some infrastructure. Heaven forbid it could be gold. I mean, I look at the statewide portfolio. It's got about just under 5% gold exposure via gold companies and some of our managers holding gold. And that's about right. You don't want to go full bore, but that's, again, it's called diversification.
Yeah, we do in MDA hold gold, and actually we hold precious metals as well. But the gold thing is interesting. We hold gold and gold miners. So just put gold miners to one side. Gold itself, you know, there's a few ways to buy gold. Synthetic gold. What's the point? We hold precious metals through ETF securities in some of the portfolios, and those metals are held in London. But we also hold PM gold, which is Perth Mint gold, and we like that product because, as we say, Clint can take his box trailer over to Perth and pick it up if he can get through the border. So I think you guys added gold as well in recent times.
Yeah. So we picked up gold via our managers and gold stocks, and a couple of our managers are holding physical gold. We're looking at gold. It just went up too quickly, but the idea of holding gold, a little bit of gold in your portfolio as a diversifier, unhedged in Aussie dollars. In other words, if the Aussie, you know, gold's set in US dollars, if US dollars fall, gold goes up. If the Aussie dollar were to fall, you'd make money on it. We think that's a pretty sensible play. Again, it's about diversification. It's part of a broadly diversified portfolio, and I think it makes a lot of sense. I think the only issue we've had with it just recently is gold's traded up like it's a tech stock because everybody piled into it. And you know, when the pullback comes, you probably want to get set and buy some more.